Learning these 10 trading lessons changed the way I trade forever and made me go from a pleb trader to a boss trader no matter the market conditions. I've been trading for a long time, all the way back to high school, but only did I become a professional trader when I did 10,000 hours watching the screen. While you're on the trading journey, you make a lot of mistakes. You learn how you don't understand risk management, how you don't understand capital preservation, you blow up accounts, you make bad decisions, and basically most people don't learn from them and continue to make those same mistakes. So the purpose of this video is to give you all the tips and tricks so that you can fast forward yourself into that 10,000 hours and not make the same mistakes that everyone else does. So number one, very important, you've probably seen me post about it 100 times. It is if you fail to plan, you plan to fail. That applies for everything in life, but most importantly when it's your money and your trading. So a good example of this would be in the Ichimoku strategy, knowing what to look for. So when I see a Kijin bounce trade or a breakout of the cloud, when the cloud is here and you break right above it, I know that I'm supposed to enter on the touch of the cloud, the retest. And because of that, I generally will be in the trade and know that my stop loss should be below my Kijinsen and that I'm gonna aim towards a level of resistance a little bit higher. So right now, it's your time to go and learn a little bit about trading. Everyone has a different style, and the thing is, as long as you stick to the same style, it all works. Number two is the most important thing you can do as a trader. I've done several videos online, on YouTube, in my courses. Why? Well, in general, it's risk management, risk management, risk management. One of the simplest things that you can do, yet seems like most people don't do it. Again, attaching to number one of failing to plan and planning to fail. So, how can you do risk management? It's as simple as taking your risk, let's say it's $100 in the trade, and dividing it by where your stop loss is. I know in my trading plan, I will generally look below the Kijinsen as my level of stop. And let's say it's 5%, I divide 5%, 0.05 by my $100 of risk. And then I would get how much of position size should I put into that trade. Once you know that, it doesn't matter if you do spot trading, it doesn't matter if you do futures trading, it's all exactly the same. So number three goes into number one and two very well as well, and that is capital preservation. It's great that you can see on paper that you're in a trade and you're up a ton of money, but if you're up a ton and you're up 50% on a trade and your stop loss is, down at the bottom of that trade and you never move that stop loss up and you don't protect the capital you've already made, you are literally setting yourself up to fail because the markets do have huge moves and you don't want to get stopped out of a profitable trade. So preserving your capital is extremely important. And that also goes into risk management, not putting too much capital into a trade, always having a set number that you're willing to lose into every trade. The same as when you go to a casino and you put the chips on the table, you know you can lose those chips, but your strategy should help you win more than you lose. Number four is a really important one, and you probably see a lot of people not doing this, and it's trading on high time frames. It's very easy to do. If you look at a one-day candle, one-day chart, is one candle, one day. It shows you a lot of stuff that happens in that one day, but it's not whipping all around every single day, right? But if you go down to a 15-minute chart or a 5-minute chart, even sometimes an hour chart, now you go in an hour chart to having 24 candles in one day instead of one. So a lot of the time, people that trade low time frames, they make a few good trades and they think they're really smart, and then they start getting stopped out like crazy because low time frames have lower levels of success than high time frame traders. So yes, you may not get rich quickly, but you won't go broke quickly either. And I always tell people that get rich slowly is the way that the wealthy people get really wealthy. Number five, now we're starting to get a little bit into the meat and potatoes. Learn the crux of all trading strategies. You don't even have anything but levels on your chart and candles on the chart. And I know a lot of the most successful traders in the world, that's all they use. And how they do that is by support and resistance. Think of this like jumping on a trampoline. When you hit support, it likes to bounce you back up higher. When you go to the top, when you're out the top of the trampoline and your inertia is gone, you come back down. So there's always a zone or a range, we call it, in crypto, and every single trading strategy uses support and resistance. So even though you see me use the Ichimoku, it gives me more levels of support and resistance. And once you learn that, it becomes much easier to be accurate as a trader. Also for the fact that you'll know where to enter because it's bottoming out, it bounces from this level, and where maybe you should take profit because it usually gets there and it stops moving and it comes and retraces back down. So it gives you a little bit more accuracy in your trading and also a better plan, because if we fail to plan, we plan to fail. Number 6, learn one trading strategy and build off of it. Do not go from Ichimoku trading strategy to MACD trading strategy to RSI trading strategy to levels trading strategy to, Bollinger Bands trading strategy. Use one. Master one skill at a time. If you try to learn 4 different trading strategies and mix them all together and you're not good at any of them, it's like being bad at a bunch of sports. Like, great, you can kind of kick a ball in soccer, maybe you can wrist shot but can't slap shot in hockey. You're kind of useless to everyone on your team. But if you literally master that one skill and you're the Tiger Woods of golf, right, then everyone's like, whoa, this guy is the best of the best of the best. That's how I've done it. I learned my Ichimoku trading strategy. I learned about levels and candles. That's what I teach people about. But then I added some EMA and things that were confluence levels for myself. And that's what you should do too. And what I do could work for you, but there's a lot of other trading strategies you can use, but stick to just one. Because if you don't, you're going to constantly go back and forth to trading strategies, and the trades that should be hitting 60% of the time over the long term become 30 or 40% because you're swapping into different trading strategies, and you end up starting to lose money. Like most traders, 98% actually don't make anything. Number 7 is a really important one, and it goes into the risk management strategy that I have. Never at any point, whether it's a market dump, it's a Luna, it's an FTX, whatever, never be in more than 5 trades at one time. And that means if you're doing 1% trade risk, that you never can lose more than 5% of your entire portfolio in one time. If you are doing this, you will never have a day where you think someone chopped off your balls, because basically that's what it feels like when you go and you lose 10 or 20% of your account in a single day. So if you open up 5 trades and all 5 trades are in profit, and you put a stop in profit for all those 5 trades, technically if they stopped in profit, you'd make money so you could open up new trades. But in general, the rule of 5 is very important. 5% of your account, only 5 trades at one time, and that's different than your investment side or your long-term holds. But when you're trading, 5 at once is more than enough to try to manage. Once you start opening 20 trades, you start losing money just for the fact that you can't actually actively manage them all unless you're looking at the screen all day long, and that's not healthy for anyone. The next one is actually kind of obvious. Never use leverage unless you learn how. Most people use leverage to add additional risk. Now, if you're using 1% risk on your spot trade, and then you're taking a 5x leverage position, and that opens you up to 5% risk, and you open up 5 trades in the rule I just told you, guess what happens? You now lose 25% of your whole entire account because you've run 5 times bigger trade size than you should be, and you're losing 5 times more. Leverage should be used to de-risk yourself off exchanges. So if you're scared of Binance or something losing their ass and like literally closing down and having an FTX thing, if you had $1 million or even 10 grand, so let's say you have 10 grand, right? And you don't want to put all of it on the exchange, it's all the money you have, right? You could put, let's say, $3,000 on the exchange, trade it as if it's 10 grand, and use leverage so that you're risking $100 per trade. But when you have, let's say, a 3% stop loss and $100 per trade, you can only open up 3 trades. You can't open up 4. So the idea of leverage is to let you still trade the same amount of capital, but with all the risk not on the exchange. So this is what most smart traders are doing. Some of them are putting way more, and that's okay too. But this is something you should learn, that you should really just master spot trading first. And once you do that and you understand how to do risk management, capital preservation, and have the rule of 5 and everything, you literally put yourself in a position where you cannot lose. And leverage trading is literally the crux of most people getting absolutely wrecked and liquidated. The next one is actually really simple to do, and most traders that I've talked to have never done it. And it's simple as writing a journal. There's no right way to do a journal. Writing notes about how you felt that day is a very important thing that I've learned. So how do you feel? What's your emotional status? Did you fight with your girlfriend? Did your kid piss you off? What happened that day is really important to your trading, game because you really learn that you become emotional, and there's days that you shouldn't even trade at all. So I've learned that the journal can help me with that side of the mental side, but also helps me say, okay, I did a Kijun bounce trade. What was the market showing? Well, the Chiku span was still bullish, but it's kind of running into the candlesticks, and that's not always bullish, but I went in on that trade, and every time I go in on that trade, I have like a 40% success rate. But when the Kijun's like, when the Chiku span's like really high above the candles and not running, having a chance to run in the next 5, 10, 15 days, the chance of that trade went up to like 55%. So you start learning like, what are your better trades so that you focus on what works and repeat and repeat and repeat, because that's how good traders make their life boring. And actually good traders will describe trading as boring. I find it extremely boring, to be honest, but that's because I found a strategy that works, and it's like being inside of a factory and putting the same thing over and over again together. Once you know how to do it, you just literally don't even need the instructions. That's how trading works for me, and that's how you guys should do it for yourself too. Number 10, and the most important thing, period, is mastering your emotions. The market should never make you so high that you show all your friends your portfolio every 5 minutes and you're like, oh my God, I'm the smartest person and I think I'm amazing. That's usually a recipe for disaster. I tell my wife every time, if I'm like this and I'm showing you too much and too often, remind me please, because I've learned with her that I say that, she tells me to sell, and then I don't sell, and then I lose money because I'm like, yeah, she's actually right. She sees my emotional status as too excited. Same on the other side, right? So when we had the huge SEC dump, when Near Protocol and Algorand, everything got labeled by the SEC as like potential securities, everything went down. Like even multi-billion-dollar market caps went down by $1 billion. And everyone was freaking out, going down 25% and being super fearful and not buying anything. What do you think I was doing? I put a tweet about it. You can actually probably go find it right now. I literally said, this is what Chads are made from. I just deployed $1 million into the market. So learn to master the fact that when you're scared that you can lose money and actually really fearful, you usually do the opposite when it comes to buying or selling. And when you're way too euphoric and way too happy and showing everybody and your mom that you're the greatest trader ever and you're just new in the industry and you're probably just lucky, that you should probably take some profit on a regular basis. So learning to master that emotional, that feeling of being, oh my God, I don't know what I'm gonna do, everything's going down, or like, oh my God, I'm the smartest motherfucker in the room. You learn to master that skill, you will win every single time, because that fear and that feeling in your gut and learning to understand if it's fear or euphoria will actually make you so much better as a trader, because you trade with your feelings and what you think. You'll trade with actually what the chart is telling you. And that is why if you fail to plan, you plan to fail. We're starting this new style of video, and I'd love to hear your feedback on what type of videos you guys would value coming out next. Don't forget to like and subscribe and share to your trading buddies or the ones who want to be one.